Hey there, everyone. We are live coming to you from New York, from the epicenter of the coronavirus, where half the cases of the nation of COVID-19 are. And luckily, though, I'm in a safe place. I am in the den of my home because we are under orders to work from home, self-quarantine, etc. And I think it's important for me to do this because I have a family and I feel my children need to see me. I need to be seen by my family, let them know I am here and everything's okay. That's our responsibility, right? As parents, that's what we do. It's also my responsibility as a financial advisor to give my clients not false reason or false hope, but solid reasons to expect a rebound, to expect things to be okay, and most importantly, to give them reason to stick to their investment plan, their financial plan. You still have goals. They don't go away. I know in an acute situation, it's hard to think about 6 years, 16 years, 26 years out. I'm on to sixes today. I don't know. Everything's a six, but that's the point. You need to be thinking long term. This will pass. As a matter of fact, just fix this. Why was the stock market up today? I mean, today was a pretty big rally. So we're going to talk about that in the face of so much ugly news over the weekend. I mean, literally by Sunday night, you would have expected to see just a massive down day. The news was so horrendous. We're going to talk about some steps that some people may need to take who are watching this, such as credit card issues and debt repayments and things like that. It's important to talk about. This isn't just, people are knocked off their feet. We've had a lot of people. We've had the rug pulled out from under us, and we are going to talk about dopamine. The more I learn about dopamine, the more I realize that I think the key to controlling everything is dopamine. It's a seriously important chemical in the brain, and we're going to talk about that and more. So let's roll the introduction. I want to keep this to 20 minutes, so here goes that. Stick around. This is going to be a really good one. All right. Thank you for sticking with me. And we've got a couple of things to talk about. I think the most important thing and the immediate thing is the stock market. Stock market rebounds 3%. The S&P 500 and the NASDAQ composite did even better than the Dow. By the way, the S&P 500, the Dow Jones Industrial Average, and the NASDAQ composite are indexes. You cannot invest directly into an index, but you could invest in a security that tracks or mimics the index. So let me show you my screen real quick. Got a couple things to go over, and we need to talk about personal finance, the stories of the day, what they mean to you, and what we should really be paying attention to. Okay, so this is the killer. If you saw this, coronavirus job losses could total 47 million. Unemployment rate may hit 32%. Fed estimates. That is a death knell headline, and that headline has been on that's been making the rounds all day. It's not like that just popped up at the end of the day after the market closed. It's been there all day. But if I had to pick some reasons why we had such a solid rip-roaring nearly 700-point up day in the Dow, well, from what I saw over the weekend is the curve for viruses in New York. It's starting to, I'm not going to say flatten out, but it's definitely not steep. Okay, so it's moderating. That's pretty significant. The other thing I think is a positive is that President Trump pushed the date for our quarantine to the national travel advisory and social distance to April 30th. So that goes for another month. I think that's significant. I think it tells you that how serious this is being taken. And I think it tells you that if we can self quarantine and do proper social distancing, we could really kick this thing. So maybe we get this economy going back a little sooner than the worst case scenarios. And that was the theme last week, that a worst case scenario might not be the right thing to factor in. Sometimes we have a good case scenario, or maybe close to a best case scenario. All right. So that's something that I wanted to talk to you about. So why was the market up in the face of such like crazy, horrendous news over the weekend, and possibility that we could see a rise in deaths up to 100 to 200,000, according to Dr. Fauci, who's just like the voice of reason. He is doing an incredible job, and we all love to see him on TV when he comes on. So that we had a rip-roaring day. But you kind of say to yourself, I don't believe it. I don't trust this rally. It's hard to accept. And have investors lost their minds? Listen, I think the whole world has lost its mind, because it just seems like there's nothing but mayhem everywhere, and it's just a crazy world we live in. Fortunately, I could say for myself, got a lot of friends who are keeping in touch with me. I'm keeping in touch with them, and everybody's making the round. So that's a good thing. I want to also talk to you about something. Because it's a tough economy, and because so many people are going to lose their jobs, we are in a recession. It's a deep one. The talk now is that we'll have a V-shaped recovery, quick, hard, sudden stop in the economy. Excuse me, deep recession, and then we come out of it as fast as we got into it. That is a best case scenario. I don't like to go with best case scenarios. I don't like to go with worst case scenarios. I usually think it's something in between. But there are a number of you out there who have to really, conserve cash as much as possible. And you have to do literally look at everything. It's become a full-time job to make sure you can conserve your cash and put off bills as long as possible, because, a lot of people don't have the ability to work right now. I mean, listen, this is not an I told you so video. This is not an I told you so episode. Oh, you should have had money in the bank. You should have had savings. Granted, that's what we preach in the financial world. That's what we want everybody to do. I think it's been such a good run for so long that it started to become some esoteric thing to be prepared for a recession. It's like, oh, how bad can it be? Because, a month and a half ago, things were going gangbusters. Things were actually pretty good. Maybe gangbusters is too strong of a word, but we did have a pretty decent economy and a pretty decent stock market. So what is forbearance? So here's the thing. You may have to take some steps to call your credit card companies, your mortgage company, your automobile finance or leasing company, maybe if you rent, your landlord, and you might have to find yourself in the position of saying, I have to put things off a little bit. And if you have a limited amount of cash, you need to hold on to that cash for as long as you can. Don't blow your cash wad now and then ask for forbearance. The best time to do this is when you still have some cash on hand. So forbearance is according to Investopedia, forbearance is a temporary postponement of mortgage payments. Okay. It's a form of repayment relief. And there's a number of ways that this could come. Usually it's just you get to delay payments for a certain amount of time. You wind up paying them back plus some extra interest, or sometimes a mortgage company could say just pay the interest only, or what have you. But it's up to you to take the time to make the phone calls. Be persistent, because everybody's doing this. You're not the only one who's going through a tough time now. But the idea is that when you use the forbearance, it doesn't ding your credit score, and you don't want to destroy your credit score by just not paying bills. Don't just decide to take it upon yourself to not pay some bills because you think, oh, everybody will understand, I'll explain it later. That means you're in default on a mortgage, or you're late on a payment. You could lose services, etc. You don't want to do that. What you really want to do is call your finance companies and make sure that they have a policy in place that's suitable for you and execute on it. Okay. I don't know how long this is going to be. You might need 2 months. You might need 3 months. You might need 6 months. The stimulus checks will start going out in a couple of weeks. You know, look, they'll help a lot of people, but the checks aren't going to be that big that it's going to help things for more than a very brief amount of time. In fact, I actually expect more stimulus checks to go out after this set of stimulus checks. Okay, so you can get forbearance on a mortgage potentially. What about forbearance on a credit card? Okay, you can take several forms. Among them, you can postponing payments for 6 months or even longer, lowering minimum monthly payments. You could also call a credit card company and talk to them about it. So don't just not pay the bill. Call them and see what you can do. And what about automobiles? Okay. Capital One of the largest U.S. auto lenders, hasn't disclosed a payment deferred program yet. Maybe that's not the best example. Hyundai said it was relaunching its assurance job loss protection program for new vehicles. GM is doing a couple of things. They're even deferring payments on new cars, so you can get your new car. Don't worry about not being able to make the payment. We'll make it for you for a couple of months. That I'm not really. That's not really what my message here is, though. My message here is if you already have a payment and you're in a tough position, call the auto company, the auto leasing, auto lending company, okay, and you start taking care of business. Look for things to cut out. You have a number of bills, monthly fees, etc. Use this time as a reset button to come out of this better than you were before. Now, you might not come out of it financially better, but you could come out of it on a better financial path. And a better financial path will make you better off pretty quickly. Okay? So that's what I want everybody to do. And all of these things you can do. You can go look them up, just, Google them, what have you. There's tons of resources for you. So I want to see people get through this. Listen, if businesses can get loans, if publicly traded companies can get tens of billions of dollars of bailout money, then why shouldn't you get something? I mean, don't feel embarrassed or ashamed about it. It's just, if multi-billion-dollar corporations are allowed to get something because they're big companies, well, you should be able to do this also. So it's there for the taking. A lot of people are uncomfortable with it. They don't like it. They don't want to do it. But you have to do what you have to do. And I think that makes you more of a responsible adult than just ignoring things and letting your pride get the best of you. Now we're going to get into something else, and that something else is called dopamine. Okay? The more I learn, we just scroll to the top, why shopping makes you feel high. Basically, your brain is a bunch of neurons. But I think of the brain as like a soaked sponge, and that the water in it are chemicals. Okay, your brain is just filled with chemicals, and one of the most important chemicals is a chemical called dopamine. And it's easy to remember dopamine because it could make you into a dope, and it has a lot to do with addiction, gambling, overspending. And the more I learn about dopamine, the more I am starting to understand that a lot of personal finance has to do with how we're chemically made up. It's not just about giving you the basics and saying, hey, well, we should just, spend less than you make, put away 5 to 10% of your income every year, into an investment account or a retirement plan, what have you. Because I think, most people know this. People who get into trouble know this stuff. And I'm not going or dissing the people who got into a tough time with medical debt or a sudden severe health issue in the family or something. I'm just talking about people who slowly start out as big shoppers, or people who just can't get away from that. It has to do with dopamine. It has to do with an escape. It has to do with the other parts of our life And it has to do with finding satisfaction with other parts of our life. Now, I'm not looking to get into addiction and medicine here. I'm not a doctor, obviously. But when it does come to inspiring a client, and that's part of what you have to do, you have to find out what truly, you have to find out what inspires me. I have to find out what inspires you, because if I can't find out what inspires you, all right, I'm just have to give a quick smile. Okay, so give a smile for the thumbnail for the YouTube video when I post this on YouTube later. So what I have to do is find out what inspires you, because even if you're inspired, sometimes, what happens is inspiration goes away. I mean, think of how inspired you are when you have a child, and how inspired you are when you get married, or how inspired you are when you're in a new relationship, or how inspired you feel after an illness and you're well again. And then we have a way of going back to the same old habits, because you're going back to the same old dopamine rush. And I'm going to learn a lot more about this, and I'm going to bring you what I learn about it. But if we can get a handle on that chemical in our brain, which gives us this incredible feeling, like a shopper's high, we call it, when you go out and shop, if you could find a way to increase dopamine from other means, then that could very well be the trigger that gets you to do things that are more productive and healthy to make you happy, as opposed to shopping. I'm not saying you should stop shopping and have no joy when you get something shiny and new. Okay, listen, we all like shiny new things. Just about every normal person does. But that's what we have to learn. We have to learn more about. So let me get out of the share screen mode. Stop screen share. Okay, so I'm back. You got me back in the full screen. Let's just check it out. See if any buds are out there. We got a couple of views, couple of these, couple of reactions. Hey, Brian, thank you very much. Brian, you and I are going to speak later. Hey, Andrew, good to see you. Sid, always great to see you. Thank you, Sid. You're always such a great supporter. We'll see who's out there in Facebook world. I mean, everyone should be watching my LinkedIn and Facebook and YouTube stream right now. You should all be watching this, because you're all home and you have nothing better to do than to watch my my stuff. Okay, so that's what we're doing. Let's see who's out there. Hey, Jerry, thank you very much. You're someone I think very highly of, Jerry. So that is particularly gratifying to me. And there's a few more people out there. Hey, Wendy. Well, Wendy's actually, that's another post. Okay. And Stacy is out there. Hey, Stacy, good to see you. Thank you very much, Stacy. You've been you've been really great. Thank you so much. I appreciate you always staying out here and always watching my rants and all that. Thank you. You are 2 thumbs up. So that's about it. That's the show for today. Just a crazy day in the market, but to the upside. Do we trust this rally? I was on last week saying we may have put in a bottom, because I can't promise it. I can't guarantee it. And I also have to be ready to say, wow, we hit a new low in this cycle, and time to go with a new search for a new bottom. But it doesn't change a few things. Whether if we hit bottom or not, we're going to still do the same thing. You're going to invest the same way for the long term. We're going to always make sure that whatever we invest in has a proper fit with the rest of our portfolio. We don't want to be in the business of just buying something because it's down and we expect to sell it the next day or in 2 or 3 days. Because if you're wrong, then you're going to kick yourself and say, ask yourself, what the heck was I thinking? So we want to practice smart investing. We're going to be doing the same thing. This will pass. We have to focus on the things we can control. I'll give you a couple of things you could control. You could control right now. Have you updated the beneficiary designations of your retirement accounts? Did you do an estate plan and now your accounts are supposed to be titled under the trust name? You have a trust now to put your assets into. Have you gotten around to doing it yet? Because a lot of people say they'll do it and then they don't do it and they put it off and then they forget about it. Okay. So these are things that you can do right now, a conscious decision to take control of something. You could rebalance your portfolio. Let's say you had a lot of, money in stocks, less money in bonds, and now you have more money in bonds and less money in stocks. You could make the conscious decision to rebalance that your portfolio. Have you done that? Have you decided to do what I've been talking about for weeks now? Upgrade on the downgrade. You've got an investment, you thought it was good at the time, and now it comes around and you think, maybe it wasn't so great. I'm sorry I bought it. Get rid of it. And then you might be thinking, yeah, but I'm going to have such a loss. You have the loss already. Don't think of it in terms of a loss. Think of it as a certain amount of dollars that's currently available to invest in something that could be better. It's just a couple of dollars in something that could be invested in something better. Forget the loss. You've already you already suffered it. The only thing you haven't done yet is acknowledge it. Okay, acknowledge it and move on. Last thing is this. Promise. The last thing. I love that expression. Last thing. It keeps people hooked. With all of the information going around, more information than ever, and every day it's a whole new level of new information and new news. Are people making better decisions? So I was invited to speak to the Long Island chapter of the Financial Planning Association to talk about markets, investing, what the economy, how financial advisors should be dealing with this volatility, what they should be speaking to their clients about, what messages they should be taking. And I'm happy to say that we needed a good shakeout to remind the world how important financial advisors are. And the reason is for perspective, because with all of the information that people have today, unlimited amounts of information, it'll be even more tomorrow, free trading apps, low-cost trading apps, etc. Look what people did with Bitcoin. It shot up and shot down. Look what people did with pot stocks, way up and way down. And look what people did in the stock market. Okay, it's the same thing over and over. People just aren't making better decisions, and that's why a helpful coach, a guide, a financial advisor could actually help you out. And if you'd like to know how I can help you out, certainly give me a call or call somebody who you trust and call them. Okay? This show is for everybody. Thank you very much. I'll end it here. And if you have any questions in the comments, certainly let me know and I will get back to you. I'll just check my LinkedIn one more time. We've got a few people. Okay, a few more reactions. Thank you very much. And I'll see you tomorrow. Thank you very much.